I would now like to talk to you about qualified business income deductions that can be found in Chapter 6. We also reviewed a problem yesterday as we were working with the income tax software, and I explained to you that you had a more up-to-date version of the Tax Act software because your program actually calculated the QBID correctly, where what I have available was incorrect and I had to adjust it. Now, before we go over qualified business income deductions and review some problems, I just want to talk to you about who is eligible for the qualified business income deduction. It has to be a trade or business, and it does exclude specific service trade or businesses, and that basically is summarized as companies that provide services that is based on their specific knowledge to actually perform the services. Some service companies that are not allowed to use the qualified business deductions are lawyers, accountants, consultants, actuarial services, athletics, financial services. There's a whole list in your book in the Learning Objective 6-4 at the end of Chapter 6. Okay, but there is an exemption for services being allowed to use it. The one exception is if you're an engineer or an architect, you are allowed to use the deduction for QBID, and it is not considered a special service industry that is not allowed to use it. Another exemption is if you're married filing jointly and your income is less than $326,000, or that's if you're married filing jointly, or if you're single or married filing single, $163,300. If your taxable income is less than that, you can use the QBID deduction. And we can see this in a problem 56A and 56B. In 56A, in your textbook, Raquan, a single taxpayer, is an attorney and practices as a sole proprietor. This year, Raquan had net business income of $90,000 from his law practice, net of the associated 4AGI self-employment tax deduction. Assume that Raquan pays $40,000 in wages to his employees, had $10,000 of property unadjusted basis of equipment he purchased last year, had no capital gains or qualified dividends. His taxable income for the deduction for qualified business income is $100,000. Calculate Raquan's actual deduction for the qualified business. In A, they asked to calculate Raquan's deduction for the qualified business income. And the qualified business income is his law practice of $90,000. Because the $90,000 is based on his business as a lawyer, lawyers are not allowed to use the QBID deduction unless their income is lower than what I highlighted during my overview. In this case, Roquan is single, so his total income is less than $100,000, which is below the $163,300. Therefore, he is allowed to use the $90,000 for the law practice, and that he would take 90,000 times 28%, times 20%, that would give him $18,000 of a deduction. In Part B, they say assume the same facts above, except Roquan's taxable income before the deduction for qualified business income is $30,000. In this case, he is not eligible because his income is greater than the single threshold of $163,300. Now I would like to go over 57, and this is an example how to apply the QBID when the income is greater than $163,300 for single, and married filing jointly $326,000 for married filing jointly. Katie is single taxpayer, so we're dealing with a single taxpayer, is a shareholder of Engineer One, a civil engineering company. So they are allowed to use the QBID deduction because that is an exemption of one of the services that are permitted to use the qualified business income deduction. And her income from Engineer One is $200,000 net of adjusted for AGI self-employment tax deduction. So it does exceed a single's threshold. So now, because it exceeds the single threshold, the calculation is a little different. Assume that Katie's allocation of wages paid by Engineer One to its employees is $300,000, and her allocation of Engineer One's qualified property, unadjusted basis of equipment, all purchased within the past 3 years. Assume Katie had no other business income, no capital gains or qualified dividends. Her taxable income for the deductions for qualified business income is $400,000. The first step here, because her actual income from engineering exceeds the $163,300, we're going to take 20% of her qualified business income, which would be the $200,000 times 20 is $40,000. We then have to do another calculation, and in the next calculation, we're going to calculate 50% of the allocated wages, which is $300,000 times the 50% is $150,000, and we need to compare that to another calculation of 25% of allocable wages plus 2.5% of the unadjusted basis of qualified property, which would be $150,000 times 25%. And we would compare the 50% calculation just based on the wages of $150,000 and the 25 allocation of wages plus the 2.5% of the qualified property of $78,750, and we take the greater of the two. So in this case, we would take $150,000 of the allocable wages because it's greater than the $78,750, and we would compare that to the qualified income deduction of $200,000 times 20%, which is $40,000. So obviously we would, in this case, we have to take the lesser of the two. So that would be $40,000. Now the next calculation would be, we would take the $40,000, which we just selected, and compare it to the taxable income of $400,000 times 20%, which is $80,000. And we would take the lesser of the $80,000 or the 20% of qualified business income of $40,000. So Katie's actual QB qualified business income deduction for this year would be $40,000. In closing, I'd like to just review the qualified business income deduction, which includes qualified business income plus income gains, losses, and deductions related to the business. Investment income and losses are not included in qualified business income. QBI, the qualified business income, is calculated by taking the QBI minus the 4 AGI deduction for Social Security minus self-employed health insurance and self-employed retirement plan.